Hello everybody, this is Matador from freetradingvideos.com. It's Tuesday the 10th of November, about 12 o'clock Eastern Standard Time, and we have had a very nice run-up on the S&P 500 ETF that started this morning after a gap down. The gap got filled, used that as a resistance for a while, which is typical, broke through that. That became support right through here. Again, this becomes a significant area to watch. We then broke through that again after a nice base on our high, running right into the 110 mark. The high was 109.93 on the SPY. Broke back through the support level and ran right back to this swing low, one of the higher swing lows of yesterday. If I zoom out, you can see where that is in context. So nice to use that as support again at 109.20, and we ran right back up into the 50 MA, which is also the retracement almost to the penny of a 50-yard line. So if I drop that line in right there, I can get rid of the noise, and that's what we're fighting into. So that 50% retracement, we're seeing a little bit of a swing high there now. If we get a higher swing low and chew our way out of that, that would be the best case scenario for the long. If we fail this and start bouncing at 109.20 and head south, then 109 probably be the next logical place to support. And that makes a lot of sense. I'll show you on higher time frame, but that is a fantastic area where a breakout occurred yesterday at that round number. So again, here's 109, even on a 15-minute chart. Some noise in here as well, but during the day, not so noisy. Even higher time frame than that, a 60-minute chart. We already knew what we were running up into. We talked about that this morning, the 110 mark. Nice little break of the swing high, good test of that. And then now we're testing again these two areas back in here. Again, making that 110 mark that much more interesting. It's good stuff. On a daily chart, not at all atypical again after a multi-bar run-up into resistance to see some kind of stall at least, especially after a big sell-off like this on higher volume, and then the volume declining on the way back up. Very good. So one more thing to remember is that when we provide this broad market analysis, we're not trying to be bulls or bears. We're trying to give you the exact unbiased view that we see by our eye, so that you can use that information for your own particular trading strategies. And that's a very powerful way to approach the markets for anybody. And so anyway, good stuff. Stay tuned and listen for D7's video coming up at around 4 o'clock Eastern Standard Time. And once again, great working with everybody.